Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment, and that's going to be Megan Brantley, the Vice President of Research at Likefolio. Welcome back to the show, Megan.
Thanks for having me again, guys.
All right, so we're talking Nike. Shares are off about 43% so far this year. It just seems like the sentiment in this big brand name has been hit too. We've seen a lot of analyst price target cuts based on the fact that they think this earnings is going to be a rough one for Nike. And I know we talked about On Holdings, which is the Swiss shoemaker, digging into a little bit of Nike's market share. But this is a big global brand. They do a lot of their business overseas. I mean, what are you guys seeing as far as data goes? Because the stock's down so much, so is your data reflective of that pullback in the shares?
Yeah, I think that our data tracks this pullback pretty well. Whenever we're looking at Nike too, one thing to keep in mind is that we're really focused in on those English-speaking mentions. So mentions from consumers, mostly in North America or anywhere that, they're speaking English. And so this is just a caveat because Nike is a global company, like you mentioned, and at least from a mention volume perspective, much, much larger than something like an On Holdings like we talked about previously. And so whenever we look at this data, this is really providing a nice lens into North America whenever you're making those correlations. And what you can see on this chart, these are mentions from consumers who are talking about shopping with Nike, so purchasing any of the brands under their umbrella, whether it be Jordan brand, whether it be Converse, whether it be an Air Max. And what you can see in the far right, what we're highlighting, so if you look at the bar that is that first quarter that they're about to report, you can see that's a low point in our data, which I think is what you're talking about being reflected in these analyst statements that are coming out, because we saw some serious degradation in demand in the quarter that Nike is about to report. So we know that last quarter, I think Nike's North American sales came in about 5% lower on a year-over-year basis, and our data was pretty much in line with this. Now, in this current quarter, we have that down by about 15%. So you see some weakening in that demand, at least on a comparative scale. But then in the quarter that we're currently in, so not necessarily what Nike is reporting, but maybe a nod to guidance, we do see some signs of improvement. So I guess the bad news, if you're Nike, at least from our data's perspective, is that we did see things, or consumers are indicating that maybe they pulled back on shopping a bit in the quarter that they're reporting, but things might be looking a little bit more positive where we are right now. So a little bit of a mixed bag there whenever we're breaking down Nike.
Megan, for all the problems that this sector of the economy has had, the problems in China, the problem with supply chain, the problems with overall sales, can direct-to-consumer save this company? Because those are the numbers that really seem to be keeping them in the game. And you're right, this quarter might be a train wreck, but stocks are going to look forward. And if they come out with positive Christmas season sales and good direct-to-consumer numbers, I mean, this stock has sold off a long way. Again, this is one of those situations where the news is so bad, any good news, like direct-to-consumer or sales are improving and they see better in the future. Do you see anything like that that might give people a reason to nibble on a stock that is down significantly off its highs?
Yeah, I think that is a potential bright spot in our data whenever we look at just those direct-to-consumer mentions. So people who are talking about, ordering something directly from Nike versus picking it up, for example, in a Foot Locker. We see those mentions remain significantly higher than they were, especially pre-COVID. I think it's up by more than 100% versus those pre-COVID levels where we saw this massive adoption spark of not only Nike doing a good job of connecting with consumers online, but consumers shifting more to that environment and that preference. Another positive data point is we isolate those sneakers mention, which is kind of like a separate app where Nike does a lot of special releases. And when we look at that, we see those improving sequentially. I think every quarter for the last 4 quarters, up by about 5 points this current quarter. So there are signs that there's still this strength in digital. So I think that's one positive note that Nike could potentially hit on. Another thing, we like to do is we like to break down the different brands. And so what you're seeing here are, the different types of items and shoes and clothes that consumers could be shopping with Nike. And we see a lot of strength of late in the Nike tennis and Nike golf. Nike got a lot of buzz, especially surrounded to the U.S. Open, especially related to Serena Williams' line within the company. So Nike's doing a good job of leveraging these partnerships and generating buzz. So I think that that's another potential positive point. I know that previously you saw those overall mention lines, so just overall consumer mentions of consumers talking about Nike, and we kind of see an inflection point there where things are starting to pick back up, and a lot of it is because of the marketing that Nike's doing and because of the partnerships that Nike has with these athletes.
Yeah, and looking at that chart, when you've got tennis and golf up top, these are cyclical type sports, and that's what's concerning about this stock. You know, based on your data, is the fact that Jordan Brand still positive, right, at 9%, but then you see Nike running down over 22%. Now, when that Serena hype goes away, right, Roger Federer, he's retiring also, so maybe tennis kind of caves in a little bit. I'm sure comparables are going to be tough. Nike golf, you know, if Tiger doesn't come back as strong as he was, you know, that's a concern also. When you look at the other chart that you have about full company mentions count, that's at the widest gap, Megan, the stock price versus your data that we've seen over the last 10 months. Is this, you know, reflective of what might happen as far as the data goes? Because if you're Nike and getting led by tennis and golf, that to me flags a warning sign.
Yeah, you know, I think if you look at this, especially if we were to scale out on this line chart, there has been kind of like a multi-year loss of momentum just related to the brand because they gained so much momentum during the pandemic and a lot of just brand buzz and brand notoriety. So I think that's why you see some of that degradation in the share price as well. You know, this is something that the street is aware of. So one way to look at it, though, is now the bar is very low. And so that is one thing to keep in mind heading into earnings. You know, we do see this degradation in consumer demand, but we've seen the stock price fall alongside this degradation. So, you know, to what degree is this baked in? I think that remains to be seen. From a long-term perspective, though, whenever we look at a company like Nike, one of the metrics that we like to look at is consumer sentiment. And whenever we look at those sentiment levels, they've actually improved by 6 points year over year. So this is kind of a different scenario versus what we were talking about yesterday with CarMax, where we saw that sentiment degradation and we were like, you know, maybe this isn't one that we would want to look into long term. But for Nike, we see those improvements where, okay, 6 points increase is really significant, especially for a company that garners the amount of mention volume that Nike does. So I think that from a brand, just consumer loved perspective, consumers still really like Nike, and we still think that this is a really strong company that's doing the right things. But we are seeing some short-term temporary weakness, especially heading into this earnings report.
Do you guys have an earnings score here for us, Megan?
Yeah, so this one, Nike comes in cautiously bearish. It's a negative 24. I don't think that that's necessarily shocking, but I will say, again, this is kind of different than what we talked about yesterday. This score has improved sequentially for the last 5 weeks. So when we track this on a weekly basis, it's slowly inching its way back more toward that neutral range. So something to keep in mind heading into earnings.
Yeah, I think that's a key point. You mentioned consumer sentiment, because that data has improved over the last several weeks since bottoming out in early August. So maybe that's a good sign, especially for a global brand like Nike. All right, Megan, great stuff as always. Have a good day.
Thanks, guys. You too.
All right, that's Megan Brantley, Vice President of Research at Likefolio, breaking down the data, Kevin.